Hey everybody, Coach Becky from BluSky, and I am so happy to have you with me today. Today's topic is going to be all about the right amount of confidence in trading, which honestly is a little bit trickier than you might think. And so I feel like there's a lot of angles on this that we could really get into and, think about all the lessons that we can gain from it to fine-tune our own trading system. So let's get into it.
Confidence in trading is a little bit of a complicated topic to just judge it from the outset. I think you have to have confidence in order to be a day trader, but it's dangerous if you get overconfident or underconfident. And so for me, figuring out how to ride the balance of that and find the right amount of confidence has been helpful in me stabilizing with my trading system. And so I kind of I've been thinking about this topic, and I think it helps create a stronger edge, and it helps you have longevity in the game because you don't have as many big blowout days potentially. So that's where we're going to kind of focus today. And for me, I think thinking about it as like an equation of you got to find the sweet spot between believing in yourself enough to be able to pull the trigger, but also being humble and knowing that the market is in charge and we have to kind of always watch our backside and be careful with the risk that we're choosing to engage with. So it's about being bold, but also cautious, you could say. I think that Robert Kiyosaki is kind of a name that a lot of people know. He was the author of Rich Dad, Poor Dad, and then a series that came from after that. And I love his quote of confidence comes from discipline and training, because I really agree with that statement. I think, putting in work and building your system is what ultimately builds the most confidence in what you're choosing to do every day, is because you've shown up for the work that's behind it. And then that work compounds. It doesn't, just come and go. But if you show up consistently and train for what you want to do, then you can have a little bit more faith in your system and you can slowly move forward from there. So I don't know which type you guys are. I'll let you guys maybe guess. Maybe I'll tell you at the end which one of these traders is more my style. But I wonder what you guys think. What do you think is more dangerous for traders? Fear or arrogance? Because I think that both of them can hold you back, and we can have complications in our trading on both ends, right? They can sabotage you in different ways. Yeah, I think they both are. So I want to think about in terms of danger, yeah. For me, I'm fear will hold you back in the backseat for a long time. Arrogance can get you into a high-speed car accident. So in terms of dangerous, I would go with the arrogance, but I think both will not get you to your outcomes, right? The goals. And I think ego and greed kind of roll into the going a little bit too hard, too fast type of energy before you've built up a strong system that will withstand it, Both of them can lead to large losses, but fear, holds you back. So they're emotional responses to trading. And if we can figure out how to actively manage them, then I think that is how we can get to the best success. And so that's the balance that I think I want to talk about today, about effectively managing, because I know it's something that I work on all the time, and have to keep my whole trading system and my approach in perspective. So two different traders, right? Trader A starts getting good really quickly. They're just born to be a trader, right? We all know people who just seem to really nail it from the get out. You find early success, you get a taste for the big green days. This trader, she's dreaming of the big vacations, the home upgrade, the luxury vehicle, the services that you can afford when the money keeps rolling, right? You start winning, it's going to keep coming. You notice you're on a winning streak, so you start trading a little bit bigger. You trade a little more often because you had an early win, and so you want to take more from the market. If you take a loss, you kind of want to hide that. Forget it happened, bury it, celebrate the wins, keep on the high energy. When that starts rolling and you're an early trader, you can think that you really have got it figured out, what, I don't know why other people are losing, but I'm not losing, I'm killing it, right? Then with the losses, they can sneak in, right? Probabilities. We're not going to win everything. This trader A, she takes some losses, right? but she's still strong. She just needs a big win to push her account right back up to where it was just last week. You trade a little bigger, you trade a little bit more, you size up. You're still feeling brave, but you're not wanting to tell anyone you're feeling unsteady because everyone's been watching you just win and win and win, right? You can get a little bit shameful when you have losses because you thought you were on a roll. But then if you're not telling anyone and you're starting to struggle, it's starting to mess with your psychology. You're starting to sleep less because you had all these plans for these big wins. And before you know it, your accounts are blown. Like you can start trading higher, bigger size, really just feeling like you're unbreakable, and all of that can shatter. Like all of that confidence that can build, you can get some ego behind there when you don't even think you're an ego-driven person. That overconfidence can shatter, and you can realize that you built it too big, too fast, and it all came crashing down. And God, that's a hard pill to swallow, right? Like you can't hide it at that point when it's all gone. You know, what do? Do you quit? Do you figure out how to refund? Like that's a really hard point to rebuild from, that giant build up, and then the insidious sneaky fall where you didn't even let your support people help you when it was starting, when the slide was starting. Like it's rough. Now, what about Trader B? So Trader B took a slower approach to learning the markets. She studied relentlessly, asked a ton of questions, read every book, journaled every trade super thoroughly, and stayed in sim for months until she had a rock solid, consistently profitable system. And then when she started live trading, but with micros for a while. And then she knew that she was getting a good edge. She was starting to gain some skill, but she didn't want to fall into the psychological hurdles that she knew would happen when you get nervous, when you put real money on the line, right? And so she's going to be smart about it. She's not going to jump in too fast and let the nerves and the hesitation, the fear. She doesn't want to start losing real money. She's built up a system and she wants to ease in. And so she's careful. She stays in her own lane for quite some time. She dissects every trade. When she does break her rules, she takes a couple days off to recenter and make sure she's still solid. Not really fully giving credence to the probabilities that not every trade will win, right? This trader can take months to years to really have a breakout, but it doesn't mean that she's not a boss trader. She could be taking excellent trades consistently and having net wins for months, but not have enough of a financial impact to her bank account to do anything big. She's safe, she's stable, she's growing, she's learning, but she's playing it smaller. Both scenarios, right? Both scenarios, neither trader is fully capitalizing on the opportunities within their skill levels. Both traders have strong skills. They know how to take a winning trade, but they're not giving enough credence to where they can push themselves, either in having better risk management or in leveraging up a little bit more with that skill, right? And in assessing your journal and recognizing where you can push it and where you need to back off. So every trader will experience to some degree both sides of what these traders would go through. I think how you navigate it and recognizing it when it's happening is the most important thing that I want to talk about today, because if you're having either one of these side issues, both of them, if you can catch them sooner and start adjusting with that real-time feedback of your trading system, I think you're going to get the outcomes that you want faster and be more steady. Your accounts will grow more readily with time. And so confidence and the way that you are competent in your trading system is a practice that you want to factor in and improve with as well, just like any other metric that you would be trading with, right? So sorry, I clicked on the wrong button. Okay, so why confidence matters in trading, right? So let's bring it in specifically to how we're going to do our trading system today. So confidence is going to impact your execution speed and your clarity, because you need to be able to kind of have an understanding of what you're looking for and how to capitalize on it. Fear and hesitation also will, but in a different way. You can miss a lot of opportunities if you talk yourself out of a trade and then it takes off without you, you know? There's a lot of different angles in the way that this will impact the way that you execute your trading system. And so it's good to have kind of all eyes on them, eyes wide open with this type of thing, because confidence is going to impact every execution that you make in terms of being confident in your system, right? Confidence, I feel like, is the bridge between your analysis in your actions. Without it, you're going to have great setups that go untaken. But with too much, your risk can explode and you can get upside down too easily. But if you can calibrate your confidence, have it be steady but not extreme, there's like a sweet spot. So you want to be brave enough to enter your trade when you see it setting up, but then not over the top, wherein you swing at every potential and you deprioritize risk management after a hot streak. There's a phrase, confidence is what transforms thought into execution. And I love that because it kind of explains that confidence is a type of knowing. You know that you have worked to understand the opportunities that are in front of you. And so then you're safe to execute on it because you've done the work to have the said confidence on that system. And safe is, it's a questionable word to use when you're talking about trading, right? Because when you enter a trade, you have to take on risk. You just have to. That's the game that it is. It's a game of risk management. So no trade is ever safe, but you are more safe. You're more steady in terms of having it be a back-tested and understood setup that you feel good about, knowing what the risk is and how you should manage it. And so that can make executions not as scary or dangerous because you have built your system around it. So then the psychology of trade execution is kind of where this is leading. And so within that, I kind of love the idea of the two pillars in a successful trading system. So those would be system trust and self-trust. And I think that those are slightly different and they have to play together to get you your best outcomes. And in doing that, it can create a stronger conviction. System trust, as it kind of sounds, system trust means that you believe in your tested strategy. It means that you have put in the time and the hours and the back testing and the journaling to know what you're looking for and when it sets up, how to execute on it. And self-trust means that you believe that you will execute it faithfully because you know you've put in the work and that you are that trader. And both are required for that consistent performance. However, both really do take time to build and to understand the markets in a way that can breed this type of experience. It's nothing that you can buy, right? You can't buy this understanding and this feel because nothing teaches you how to execute on the markets better than just executing and then feeling it out and then adjusting over time. And so that work and preparation that can take months to years to really grow like a sustainable, strong trading business that can have the long-term edge, it just takes that time, that much time to have a conviction, a true, strong conviction in your edge. But I do think that every time you pull a trade within your system or outside your system will teach you and will help you refine your edge. And so your system is going to get stronger and you'll be kind of shored up for every trade that you make. Because we know when we take a trade that's outside of our system because of FOMO or chasing or emotions or what have you, those will teach you too. They'll teach you of, I tried for this, like, I hope it worked out trade and it didn't. And so that will reinforce the fact that you shouldn't do that anymore, right? So every trade, win or loss within your system or outside your system will make you better and will create this stronger system trust. Because if you execute outside that system and it fails, you're going to want to gravitate towards only putting your capital on the line with certain setups. And it kind of takes the element of luck out of the equation, right? The more you can kind of drill into it, it will transform you from a gambler into a career trader. Now, if your edge is just blowing accounts, welcome to today's lesson. Please stay. And then Mark Douglas for the strong edge here. We all know him. In trading, you need confidence. You need confidence in your edge, not in being right. And so I feel like the confidence in your edge, that comes from endlessly working your edge and learning it inside and out. And that way you can kind of know where your trade is coming from and what it looks like and how it's set up and how it transpired. And then also when it isn't, when you hope that this level will hold and it will give you the bounce that you need and you take it long from there, for example. But if that level fails and it blows through, then that trade plan is off and you have to step back and reorganize, plan ahead. And then you can more fully capitalize on each opportunity when it does set up, because you know specifically what you're looking for. And so it's not really about being right. It's more about watching your system set up over time. Oops. Okay, so I don't know if everyone has seen this, the Dunning-Kruger effect, but it is so applicable to just this conversation. And so this is about the confidence curve, relating it to trading. So with trading, we all start honestly ignorant. I mean, that's just what a new person is when they are learning something that they don't understand. It's not a negative connotation, it's just the reality. You don't know what you don't know, and you're curious and you want to know more, but you don't have skill. But it can progress pretty quickly. I mean, the market is full of gurus and education and opportunities to learn and practice. And so if you get early success, that's why we all stayed, right? All of us are still in this trading game because we found some early success that taught us that this is a real thing and that we could potentially really capitalize. And so that early success is what fuels us to pursue more and to stay in this game. But then it gets tricky, because as you start building your system, you will, I love this as peak of Mount Stupid, Valley of Despair. This is when the early successes breed the early losses, right? And then you have to really dig in and start building the competence over time. And so that kind of slope of enlightenment, during that period, you're going to have some overconfidence, some competence, some setbacks, some growth. But overall, if you stick with it, the more data you take in with eyes wide open, the more you're going to level up your system and get more skills in this game. And then this plateau of stability looks beautiful. I mean, that's where we're heading towards, right? And that's when you get true confidence and you can be humble about your skill and kind of sit back and know that you don't need to chase every trade, because with your system, you're going to have great opportunities and you're going to have lukewarm potentials, and you're going to start gravitating towards just craving this sustainable, smart trades that you have seen time and time again. You're going to get less into arguing over every little thing with the market and just sticking with your edge. And I think that every trader who has really made it in trading has gone through this period. And the key is to find that sustainability where you're still putting in the work and working on remaining competent and stable and fine-tuning your edge continuously. Because then, like, the more you learn, you realize risk. Everything just develops into that beautiful place where you can execute consistently, and it's not this big thing where your emotions will swing wildly because you're not sure and you're afraid, and you can get more realistic and reliable with the opportunities here. I think that this is very similar to reality of what most traders are going through. You're forged in the fire kind of as a trader by surviving this valley of despair where you lose money and you pay market tuition, and how much that is depends on who you are and how you're trading and what sort of capital you're using, But I just don't think that there's shortcuts in this process. I think this is pretty typical of what you kind of have to endure in order to get to the sweet spot. And I've kind of I think eyes wide open is the best approach, because you're not living on hopes and dreams and losing money in the process. Instead, you can kind of try and mitigate the losses when you're down here, trade with the prop funding companies so they carry the risk and you're not blowing up thousands of dollars of your own money. I think there's a lot to be said for that opportunity in recent years so that we can have a little bit better risk mitigation in this role. So then let's talk about how we can do that kind of more specifically too, of building a real confidence kind of beyond ego, right? I mean, ego is what it kind of looks like when you get into that overconfidence, I need to be right type of energy. So I love the equation of real confidence is evidence times repetition, because the data that you can accumulate as a trader, the repetition is going to come from every time that you experience certain setups, and then that's how you create an instinct. It kind of boils down to the experience that you pay attention to as a trader, and then you choose to learn from every trade, every conversation, every setting with a mentor or a coach. Those will all help shape you, and then every trade, if you think about it, is like a rep in the gym. Every rep is a chance to get stronger, to understand more, to build up strength, and then you keep notes and you write down tips from people who maybe have a little more skill than you, a little more time in the game. You review your trade stats and you journal your executions and their outcomes. And then that evidence of your trading system and what you're building, the evidence eliminates the guesswork, which is amazing. When confidence is grounded in proof, it doesn't need to shout, right? It's obvious, it's insidious, it just builds naturally. Because that proof, it will sink into your subconscious deeper, and you can start building your instincts as a trader, not purposefully, but because of the work that you're doing, because of the trades that you're experiencing. And I think that trading vantage point is so much more calm, right? To know that you don't have to like force feed yourself any bits of information, but just by showing up for the work and knowing that over time, that effort you're putting in is going to strengthen your instinct. So if you've been a trader for a bit, I think you kind of know what I'm talking about here. It's like a calm peace that you can feel when you enter a trade that you've seen 100 times. You have seen the trade set up. You have seen yourself take it. You have seen the outcome work. You know when it's working versus when it's not. It's hesitating and maybe you need to cut it. That is so much more gentle of a trade to experience, because you can anticipate relatively accurately what might happen XYZ, and it makes trading more enjoyable. You can let your trade play out and lock in the green when it gets to your levels instead of kind of having some anxiety around it and getting out early. It's like a more solid way to approach what you're trying to do as a trader, and it's such an enjoyable experience. Do you guys know what I mean? Have you felt that? I can't see what Futz's thing that he posted is. I don't know what the deal is with that. Oh, there. This popped up. Oh, yeah. That looks like a great slide. Thank you for posting that. I think it really is the truth to like realize that it's not supposed to be built overnight, and it isn't for anyone. And there's so many gurus, self-proclaimed gurus out there on the internet that say, I was successful in 1 year and I bought my first Lambo trading. Come join my system and trade with me and you will have these outcomes. And I just think that that's some BS, to be honest. Maybe he did. Maybe that's a one-off, but I don't think it's the most reliable outcome and growth learning curve that is experienced by humans that are doing something super hard as day trading is. And so that's kind of I think having these real conversations are more valid. They're more grounding for me, especially to know that I'm not abnormal with this, So another way to strengthen this, right, is prepare. We talked about that a little bit in Power Hour with Coach Bat just in the last hour today, because preparation is a significant source of confidence in anything you do, and especially in trading. And so I love the whole idea that confidence starts before the bell, and that what you do before you start trading is a powerful moment for you to be stronger as a trader. And so for me, I think viewing it as preparation transforms uncertainty into readiness. And thinking about that when I get up in the morning and I do my morning system, I set up my game plan, I prepare for what I think might happen, I draw my levels, I have some quiet time to deep breathe and make sure I'm steady and in a place of control. That gives me really the best setup for my trading. And so I think that that's a key component, especially for me as a trader. I know that I love trading the first hour of New York session because I feel like for me, I get to wake up. I'm the first one in my house that's awake. It's quiet. I get to think through what the market has done, what the market context is, how it's setting up for the day. And I can be peaceful and in control. And knowing that day trading is going to ramp up your energy and your emotions and the volatility because you're putting risk on, having a place of stability to start from is going to give you a better outcome, I would say. And so you want to have a strong plan, whether it's before market open or if you trade later in the day. You can do this at any point, but before you're trying to engage in an active trading session, prepare for it. Find the rituals that speak most to you and your personality type and how you settle your brain and focus your mind. Lean into that. So journaling, reflection, meditation, visualization, a quick run in the morning. I think different people are grounded in different ways. but do you, right? Do you that gets you at a more peaceful and focused place in order to best capitalize on your trade when it sets up, because there's going to be trade opportunities every day. That's why we're here, right? That's what the market offers. And so for me, if I can be calm and peaceful and know what I'm looking for as an entry signal, then I'm ready, I'm organized, I am more confident, and I can pull my trigger when the charts tell me to. And that trade almost always goes more smoothly. It's not a guarantee win, nothing is. But also, I'm more apt to honor my stop loss in that situation too, because I recognize what the risk is on that trade from a calm, focused point. And so even that first stop out, if it happens, I can be more calm from that as well, because that was part of my preparation. Oh yeah, I love talking about pre-market routines. Maybe we should look at that, Matt. And I don't have a Lambo yet, full disclosure. I do have a third row nice SUV, but it's because of all the kids. I don't think I'll ever have a Lambo, side note. But that's a personal choice. Managing self-doubt. So doubt is obviously a factor in being a confident and successful, consistent trader, right? Doubt is dangerous. So I think you want to recognize that that could impact your trading, and so to identify triggers of that as well on the flip side of being more aggressive. So you want to know, like, a losing streak, a day or two that's red, or you're hesitating on a trade. It could be because you're doubting your system, not necessarily because your system is wrong, but it could just be just the nature of probabilities, and you're in a moment in time where you're wondering, is it you? Is it the market? Is it XYZ, you know? And so I think digging in when you're having those moments to identify what's going on behind it so that you can deal with it is the most effective way to kind of handle it. So reflection tools, trading journals, emotional trackers are out there where you can figure out, you know, do I feel heightened emotions? Did I sleep well last night or not? Am I worried about all these other things? And so I can't even focus on my normal system. Those are things to consider when you find that you might be hesitating. And like, I guess I love that whole idea of reframing doubt as data, right? It's a signal. It's not necessarily a stop sign that your system isn't working, but it could be a signal that you need to deal with something. Something is not allowing you to fully capitalize on your system. And so it is telling you that something in your process needs attention. Something is not as dialed in as ideally it is when you're operating at full capacity. So you got to weed it out and then work on it. Because if you can manage your doubt, you know, your confidence can stay resilient. You can have a red day or two and you can pop back in feeling just as strong as ever. But you do have to sort that out so you can quiet the fear or self-doubt and focus on your system and identify if your system also maybe needs work in that moment. You know, maybe you are having a couple red days because you need to tweak something in your system. But if you're worried about the emotions of it, of the fear of not being good enough or something, you're going to miss that. And so using the doubt as data, super helpful. And then if you can determine what it is, do dig into what you need to understand and fine tune, right? So in that situation, if you're not sure, find someone to talk it out with, I would say. You know, your coaches here at BluSky or your trading partner, someone that you trust in this world that you can DM, get on a call with, send them your charts and be like, I didn't understand this setup and I tried this and it didn't work out. Getting some feedback on where you went wrong in a trade can help you get out of your head and into the charts and figure out if it's just the nature of the beast and it was a good trade and X, you know, something happened. Then you gotta let it go, you know, realize what happened that day and then don't hold that negative energy, any sort of doubt, because that can hold you in a negative vibe. And that is just not helpful. This Susie Sam quote, doubt kills more dreams than failure ever will. It's so true. And I think so many people, most people can doubt themselves into a safe and uneventful life. And there's nothing wrong with an uneventful life. But I don't think day traders are striving for that. I think, you know, we're here because there's the potential to make a lot of money. Like, it's real and we have seen it. We have taken big trades and ideally that's what we want to take, right? We want to have the nice big P&Ls. And so we're not here to be held down by doubt, to hold ourselves down. You have to kind of learn though how to persevere. And so you want to not doubt yourself, but instead focus on the logics part of it, what you can change. That way we can get the financial freedom that it can provide. But I think to allow yourself to level up to the highest highs that trading can provide, you can't hold on to doubt and let that hold you down, because doubt will keep you safe. But is that the end goal, It could just be a temporary sign of what you need to work on. And so I think we thank doubt for giving us the data, and we fix our system and we get at it the next day. I think that is my approach to help kind of deal with it, that everyone's going to experience. So on the overconfidence side of things, I think that is where you can really see the account blowups, right? Doubt will keep you safe for longer than maybe you need to, but overconfidence is going to be expensive. And that can look like oversizing, revenge trading, ignoring stops, holding to a bias and not the data that's on the screen in front of you. And that's going to be expensive. The market punishes arrogance quickly, usually. I think confidence is an asset in trading because you need to be able to pull the trigger on your opportunities. But if it mutates into ego, the sooner you can identify that you feel like you can't lose and you're going to just nail this forever, you got to rein that in as quickly as you can, because I think over leveraging really can damage your equity curve. It can really set you back if you are wrong and you get into a place where you're trading a bias or a P&L. It's dangerous, and it can sneak in pretty insidiously. And honestly, it's so easy. Like I can absolutely say that I have felt the pull of greed and average trades and got in too heavy, especially after a first loss in the morning, to want to fix it, especially if I'm on a winning streak. It's just easy to do. Like, full disclosure, like, it's easy to do. And if you think about it, you're literally, a lot of us are alone at our devices, and you just click a button on your computer and money is coming and going. And so it's dangerous in the way of, there's risk if you're not managing that carefully. It's honestly kind of wild. I mean, if most jobs you show up, you do work, you're paid, taxes are taken out, it's controllable, it's understandable. But for us, we're clicking buttons and money is coming and going so fast. And that makes sense that it causes heightened emotions like this. And greed makes sense too, because if you've had some winning trades, like, you're like, all I gotta do is click a button and I made 10 grand. Like, that was amazing. And so I think if you get good and you start getting any kind of consistent, there's a period where you're going to be honestly kind of infatuated with trading. It's an allure, this money that can come so fast, and the potential and the great feeling of a win streak, like when we've had multiple wins in a row, you're pulling payouts, you're progressing to the next level within your funding. It's amazing. But there's a danger point there. There's a drug feeling to it, right? I mean, there's a high from a lot of money coming really fast. And so I think that's where you have to know that that's coming, to know that a hot streak is amazing and enjoy it and celebrate in a reasonable way, but recognize that, there's a risk there of being too overly confident. And so to make sure you're always in that situation, like, enjoy it, but also honor your risk management and don't push the leveraging too fast, because overconfidence can be an obstacle that you'll have to deal with when you're on those highs. And I vote we all get on winning streaks. I think that sounds amazing. But just when that happens, as you progress as a trader, keep it in check. Allow yourself to systematically leverage up when you start getting more skill, but in a reasonable way that your logical mind is driving the amount of energy the amount of leverage that you're using in your trading system. Oh man, do I get it with the toddler life, Hammy. And coffee, and my toddler is sick right now, so he's up coughing half the night, so I'm with you. Okay, what about the flip side of that? So underconfidence and missed edges. So that is a factor also for different personality types. Generally, a person will more quickly have to deal with overconfidence or underconfidence. They're slightly different energies that you would bring to trading. I think every trader would have to deal with both at some point, but usually it's weighted one side or the other. And so for the trader that struggles a little bit more with underconfidence and not fully trusting themselves early on, there is an unrealized opportunity cost with that, that you are skilled, but you're kind of allowing yourself to keep it light. You're not fully reaping the benefits of what you know how to do for a little while. You know, you could be a trader who sees a pattern, a trade setup work 20 times, and you learn it, you see it quicker, you can trust it. I would say in that situation, if you're the person who is still trading it just with one contract, even though you've traded it successfully for a long time, micros or minis, depending on your level, lean into the evidence of what you're doing. So journal your trades and then look at your journal and see that this trade that you have seen has worked 19 out of 20 times. And so that information can reduce your hesitation and can sharpen your response time. And then you can start to dabble with saying, you know, my journal and my experience is telling me that this excellent setup that I can see in the instrument that I have studied comes and it's a killer trade. And so I'm going to start trying to add one more trade or half size up from there. And then you journal that. You say, I did trust myself in the setup, and look what happened when I trusted that. And so you can use your evidence essentially to help kind of push yourself past any sort of hesitation that you're experiencing. And just know that to be a trader, you have to take risk, but you can take slightly more risk when you know that the success rate of given setup is higher. And so then when you have a determined setup presenting itself, you can have a little bit more peace with it. And you do know you have to respect the fact that it's not going to win every time. That's probabilities. That's the game that we're in. And that's why you have protective stop. And so again, your system's data can also help calm that, because you know, even if you're in slightly heavier because you're pushing yourself, you still have a protective stop. That means that your account is safe. And so Becky said it will work, and to leverage up, maybe, but make sure it's a setup you studied your butt off for and you have a protective stop. And then, you know, it's a way that you can start to push yourself a little bit more and realize a little bit more profits as you're growing as a trader, because the whole point of sticking with this over time is to start making more and more income based on the experience that you're gaining that, you know, make you worthy of that, right? It builds the proof will build that confidence. So feedback loops are really good at stabilizing confidence. And feedback loop is like this. So you plan a trade and then you execute. You review that trade plan, what your setup, how it went, what the outcome was, and then you adjust and then you repeat. The market does have repeatable patterns that we have seen time and time again. That's a conversation for a different day. But when you know you have a trade setup and a pattern and you have traded it and your statistics show it is a profitable trade, you can keep fine-tuning it over time. Use your journaling and your experience to adjust that and improve as you grow. And then that will create confidence from like verified improvement. In that situation, your journal would show, you know, this setup, you slowly adjusted this and did that, and it's been consistent and it's grown. And so that data for your edge, whether it's winning or losing, that feedback will boost your confidence for both ends, because you understand what your trades will look like more often than not. And then losses, when you keep them manageable and you study them after the fact more clearly, honestly, those can also build your confidence and your skill and your edge, because that feedback, it doesn't have to be negative. It's if you view it as not a loss, but instead feedback, sure, there was a little hit to your P&L, but it's going to make your system stronger overall, because you're pulling that data into your system and you're adjusting. And then you're going to plan again the next day when you see different setups. You will have that adjustment built in. And so ideally you will be stronger executing based on what you saw and what it looks like the next time. And so then you start to build a track record essentially for your trading business. And that track record kind of fuels your confidence based on your system, your market, your edge, what you continually see. I don't know if you guys know Jack Welch. He was a CEO of GE for, I think, 20 years. He's passed now, but this quote from him: "You don't build confidence by shouting affirmations in the mirror, but by having a track record of success." There you go. Matt knows. So that's basically saying, like, don't will it into existence that you're going to be successful, confident, excellent trader. Instead, like, show up for it, journal, trade, adjust, grow, and then your success will compound, and that success creates your confidence to the right degree because it's based on what you have done. And not everything in that journal is going to be a green P&L, but all of it will be the creation of an effective system. And that's the success that is like long-term stable, right? So speaking of long-term stable, we want to be able to capitalize more over time. You want to be able to leverage up and really get paid for the amount of work that you're putting in as a trader. But this is where you got to do it responsibly. So you want to increase your size when your data supports it, and then you gradually scale up. And that makes it more stable because you can build resilience and trust in your system. Confidence is what leads you to scale up responsibly in this way, because you're not trying to gamble bigger. Instead, you're expanding based on your statistical proof. And so those are very different approaches to expanding your profits as your skill grows. One is based on trading said system so many times, said pattern, and knowing that it has a high success rate. And so when that high success setup is approaching, that's when you can take it slightly bigger and then maybe scale out, holding a runner for slightly longer if your data has shown that this one setup is solid for 1 to 3 R to R, but then also sometimes can go to 1 to 10. In that situation, you might consider adding on one more contract or a little bit more size and being able to hold something longer while managing your risk as you go and, like, you know, controlling your stop loss management, trailing it. But this is the kind of information that helps you leverage up responsibly, and it's based on the confidence you gain in your system from your data. And so that is a statistically valid system of allowing your P&L and your equity curve to grow a little bit more exponentially, but not in an unsafe way, being that you're going full port in any potential setup, because that's not how you chose to manage your system, because you want it for the long term. But, you know, staying the same size forever versus full port, there's a middle ground that you can, you know, aim for. And I think that is really a powerful idea for us to aim for. So I alluded to this earlier, but just want to talk about for a little bit more here, is that the role of losses in building confidence, because they don't have to take away from your confidence, is I guess the main point, right? Losses are tuition, but not necessarily failure. I think process-based traders learn more from the red days. I certainly learn more from my red days, and the trades that didn't work out frustrate me, and I want to understand what I missed. Well, obviously I entered a trade based on thinking XYZ was going to happen. So when it doesn't, I want to know why. What did something I missed? Is it just a probability? Could I have done something differently? If I was more patient and waited for a little bit more information, what would the outcome have been? And so, you know, learning to be confident and successful long term has to include being comfortable with losing gracefully. Handling a drawdown in the best way possible, that can define your professional maturity and your ability to let it grow over time and not get a little too emotional and make some bad choices in the setting of a loss. You know, it hurts to lose. It hurts to have a red P&L when you think you're going to have a great day. You know, like I said, pre-market, you come in calm and focused and ready to just kill it, and then you don't, and it's red. You know, there's a moment where you could give in to those emotions and feel real bad about yourself, but that's not necessary if you can get past that, and it's not the goal as a trader either. You have to kind of, as easy as it is to say, it's harder to do, but you have to accept the risk fully. And if a trade hits your stop loss, that is feedback. And you don't have to be perfect, nor should that be your goal, because stop outs happen to every trader, no matter how long you've been in the game. And so having a mature approach about it, knowing that there is just a risk to be in it, but if you don't try to avenge the loss right away and instead back off and choose to learn from it, you're going to really enjoy the outcome of that over the long term more. And you will have made a tuition payment essentially that day in your loss, but it's towards the goal, right? You have to pay tuition in college to learn. You do in the market too. It will make you a stronger trader over time. And so these choices are the experience of becoming a confident trader. I think many of us have heard this quote from the epic trader, Alexander Elder. The goal of a successful trader is to make the best trades. Money is secondary. So that quote is actually really quite well known because it's so dang true. When our priority is effective and well executed trading, then the money comes. The P&L is the outcome at the end of the week because you're really not trying to be green. You're trying to trade well within your system and execute on your best setups. And that's kind of the heart of being a strong trader over time. And I just think it's such a beautiful lens to view it all from, to shut down the anxiety over the dollar amount at the end of the day, but instead, did I trade well today? So the confidence routines that you can put throughout your whole day and life can help just stabilize you also. So the morning edge, right? Like prioritizing your pre-market routine is important, and potentially the most important setup in your day is making sure you're calm before you execute. But then also it can be throughout your whole day, right? Having a strong post-trade reflection is valuable in order to have longevity in this game as well. And the rituals that you can build around being a confident, competent, stable trader, those rituals can build the consistency that you need to be in this business. And so you want to treat mindset work like any other performance discipline as a part of your trading edge. And so steps that you want to not skip, trading, journaling, analyzing your trade day at the end of the day. What habits did you do that worked well? You want to respect and prioritize the whole picture of yourself being your best trader. Making sure that you're moving your body and you're communicating with at least someone in the trading industry and not keeping it all to yourself, because I think isolation is kind of dangerous in this world. And so really knowing that you have a business around trading, even if you only trade for 10 minutes a day, a 10-minute trade in one day in a leveraged instrument has the potential to make our daily income, weekly income. And so to say that you're only a trader for 10 or 15 minutes that day, I don't think it's the best approach. I think it's better to be a trader and to know that you need to be a pre-market, preparation and post-market analysis and something in your routine that keeps you calm and steady and energized and fills other buckets so that you can be neutral in terms of your energy and emotions. I think that creates a successful, competent person long-term in order to continue executing on your system. So the compounding effect of calibrated confidence is amazing. And so this is where, kind of bringing it all together and what it will look like for the long term. You want small, steady growth in your self-trust, because the more you can trust yourself, the calmer you can be as a trader executing on your edge. Confidence is exponential in a healthy way. So like a 1% improvement daily in self-trust and honoring your trade plan and your intentions, that will compound into a stable approach to life and to trading in your performance growth over time. It's like what we talked about last week with organic growth as traders. Confidence is a part of that, and it compounds in the same way when we're consistent with what feeds it for the most effective outcomes. And it doesn't ever mean that you have to be perfect, but you do want to be as effective as possible and take education from the imperfect trades that will happen. And then I also love the idea of protecting your confidence. And so that, I think, that it's the same as protecting your account, right? Not having a big blowout tilt day is not good for your accounts, but also the same approach to your confidence is important. You don't want to throw all your rules out the window and just hope that you can get right back to where you were, because it's harder to rebuild when you wreck yourself, your emotions, your counts, all of the things. It's like maintaining a healthy physical fitness, right? If you stay active, continue moving your body, avoid the worst of the junk food, you can maintain a pretty solid health framework body. But if you have big splurges and there's times where you just totally throw it all out the window, gaining 3 pounds is so much easier than losing it is, right? I would say to try with your confidence, to maintain your confidence instead of throwing it all out the window. You're going to stay more steady in that way also. So try and protect yourself and your mental capital by honoring your rules and your intentions and your system in order to be a little bit safer in that role. I did say that. So I think leaning into people that really support you and keeping the focus on multiple aspects of your trading system is going to be powerful. Mark Douglas, one more time, confidence is not, I will profit on this trade. It's, I will execute my edge faithfully. So confidence is the one variable. It's a variable within trading that we really can control. We can choose to practice as traders that we honor our system and we support ourselves and we lean into the people that have our backs. And that is, our confidence is listening when we do these things, when we honor our intentions and we do the practices for our whole trading business that we intend to always do. We review, we execute only on our best setups, and then we allow our confidence to build up over time. And I think that is the core to managing peak confidence as a trader, but not sliding into overconfidence. And so I kind of I'm not perfect with this, but I know that by having awareness on it and thoughts around what it looks like to honor my trading system and who I want to be as a trader, always in the back of my mind or the forefront of my mind, I do a better job at leveling off, I would say, and believing in myself. And if I'm slipping, to let someone know, if a particular loss or a fear is really pulling at me and it's sitting in the pit of my stomach and it's haunting me, letting that fester is unpleasant at best, and it can really cause outcomes in the rest of your life, not even just your trade outcomes. And so by saying, I'm struggling or whatever, know who your people are so that you can restabilize as quick as possible. Because like I said, you don't want to wreck yourself because it's just harder. And I have found that the hard way, by not telling people if I'm struggling. And so for me, stability and confidence does lead to stability in my trading outcomes. And it seeps in deeper into my subconscious also, because the evidence is there that I'm honoring my system and I am living out who I want to be when I trade, and my P&L is the outcome of that. And so then that data shores it up in my mind, my energy, my subconscious. And I think that is really powerful for the longevity. Confidence, healthy confidence is a strong edge in trading. And that does get us the beautiful P&L over time, because it just makes us stronger traders that don't need a windfall or to gamble because they're confused and scared. Instead, it says, back off, ask questions, journal it out, figure it out, and you will get to where you want to go faster, and you'll do it in a more steady way. So anyways, that's my thoughts on confidence, you guys. I really appreciate you guys showing up today and being here with me. I'm enjoying joining BluSky and talking about important topics that really help us all become stronger traders. So that's what I got for today. What do you guys?
I got a question for you, Becky, if you don't mind.
Absolutely.
I love your sessions. First and foremost, I think you do such a fantastic job.
Thank you.
I also put a couple reminders. Becky goes live on Tuesdays after the market. I go live in the lab on Thursdays. If you want to get reminders for those, I did post both the reminders in the chat here. My question, Becky, for you is, I've long held the belief that education plus application is the key to success. That you have to
Yes.
sit your butt in the seat, go through the process of learning how to do this. And number two, if you don't apply it, education without application is just, you're the smart guy in the room, but you're also the broke guy in the room. It takes both. But
Yeah.
after years of doing this, Becky, I feel trading psychology is right there with it.
Yeah.
How did you get so how did trading psychology come to you so fast in your journey, I guess? Because it took me a few years and it took me getting punched in the face a couple times to understand the value of trading psychology. You
Oh.
seem to understand the importance of it from the get-go. Did it come to you easy? Did it take time? Was it books? Was it mentoring? What was it that got you to embrace that mindset so much?
Oh, that's a good question. It was definitely getting punched in the face multiple times by the market. And then, yeah, it sucked. I had multiple episodes where I really thought, this is it. I understand this edge. I see how this trading system works. I'm going to win. And then I would lose and I would blow counts. And after probably the 12th tearful phone call with my mentor, who's been on the podcast a couple times, Jermaine is his name, he finally was like, "That's you. Like, you're losing because you're not accepting the losses and able to be wrong and realizing this is a long game and settling down after a losses and allowing a red day to be a small red day." And so he basically just straight up to my tearful face said, it's you. You know, if you don't tackle this head on, you're not going to get there. And so he turned me on to Dr. Joe Dispenza. And I really dug into his work about neuroscience and neuroplasticity and the importance of reframing our subconscious mind. And that's where it all started with me. That was 3 years ago, 2.5 years ago. And then I got my first payout 4 months later because I was like, he's right. You know, like, do I want to keep having these like boom and bust cycles and then hating myself when I mess it up again? I don't. And so that's when I backed off. I leveraged down and I really started doing the homework of figuring out why I couldn't take the small red days and what it was in my psychology that I felt I wasn't worthy to really win. And I honestly think it's the work. Like what you're saying about the work of trading, it's real. It's all real on the charts and it's real in our psychology. And I think owning the fact that we will make us successful or we will make us fail. It's a hard pill to swallow, but you have to swallow it and then you have to dig into your own
Own that
subconscious.
responsibility. Yeah, I think
Yeah.
it's very important to accept that that is your responsibility. That as a trader, yeah, we can blame the shadowy figures on market manipulation, but at the end of the day, we control everything. That's one of the reasons why
Yes.
we love to be traders,
Yeah.
is because we control the outcome of so much. I find your sessions amazing, Becky. Truly, I just wanted to pay you the compliment. I saw you mention Robert Kiyosaki earlier.
Mm-hmm.
Um, talking about getting punched in the face. That hard nosed Marine punched me in the face a couple times, and he was kind of very important on my own personal journey in understanding
Mm.
trading psychology.
Yeah.
I remember, I don't know if you know this, Becky, but I actually, Robert was one of my mentors, and I was the director of Rich Dad Education for many, many years.
No way.
And oh yeah, I know Robert fairly well.
Dang. Hook me
Um,
up.
I remember Robert one time. There was a meeting between me and about 20 other mentors, and Robert was there, and he literally in front of the entire mentor group basically said, "Matt, you're the dumbest smart person I've ever known." And I started laughing because I was being analytical and questioning and answering and just trying to understand more than anything. And Robert Kiyosaki, he wrote a book called Cash Flow Quadrant one time. I highly recommend it. It was a follow up to his famous book called Rich Dad Poor Dad. And Rich Dad Poor Dad put Robert on the map, but I
Mm-hmm.
actually feel Cash Flow Quadrant is a better book than Rich Dad Poor Dad. There
Nice.
was a story in Cash Flow Quadrant regarding an African village that wanted to get water to the village, and there was two individuals that basically decided one time to take out a contract to provide water to this village. And the one guy went out there and purchased a couple buckets and got his son and his son's friends, and they started every single day going to the lake and bringing the water back to the village. Every single day they would get paid their contract. The other guy who got the contract went out and built a pipeline from the lake to the village. Took him about a year to develop the pipeline. Once that happened, the water was flowing, put the other guy out of business. He took the pipeline, took it to other villages, and became a very, very, very rich man in Africa. And at that story stood out to me because my father, he was the poor guy who, started a small business that wanted to go buy some buckets, that wanted to go walk to the lake and walk that back every single day. Robert taught me there was different ways to do it. That
Mm.
it's about understanding your system, understanding the rules that go into your system and the preparation that it takes to before you ever do anything. Like so many times we get a wonderful trade idea that we just go out there and do it. We don't backtest it. We don't really kind of process it. We don't think about the environment. We just get an idea in our head and we go do it.
Mm-hmm.
Whereas sometimes sitting down, building your system, building your foundation, taking time early on, specifically early on in your educational journey, in trying to figure out who you are as a trader, it takes a little bit of time. So I just wanted to say thank you for bringing up the topic today. I thought it was a wonderful session, and I just wanted to pay you that compliment. So really appreciate you and love you on the team, Becky. You're amazing. Thank you.
Oh man, thank you. That was an excellent story that really actually drives the same thing home, like don't rush it, like allow it to build and let your data change you when you're really listening to it. Yeah.
System.
Yeah.
In trading, it's all about system.
Yeah.
What is your system? What is your rules for that system? It can't be chaos. It can't be random.
Yeah.
Everything has to be based on a systematic protocol. If A happens, then B, what do you do for C? It's not random. Trading is not random. You got to remove the random elements from it, but it's all system. And I think that's what you talk about here today. And I think that's what a lot of those mentors that we talk about in general, they preach
Mm-hmm.
is system, system, system. And if you don't have your system, that's why we put on these sessions. That's why Becky shows up on Tuesdays. That's why I do the lab on Thursdays. And so, guys, once again, if you love Becky's mindset lab here, and if you love the trading lab on Thursdays, hit that join in the links I provided earlier. You'll get reminded. We go live every Tuesday and Thursday. And the last thing I'll say before I just send it over to Becky to give her final here, love the team at BluSky. You guys are what makes this company special. You guys showing up all the time, coming here, being the best part of BluSky. And I just want to say thank you to the team as well, because without you guys, we're nothing. We love our team. We love you guys showing up, and we hope that you guys love these sessions as well.
Thank you, Matt. Like I completely echo all of that. I am new to BluSky and I feel so welcomed here, which is an amazing feeling because I have never live streamed before this opportunity. So I was a little nervous with that. But I'm systematizing my approach and I'm learning as I go and I'm taking notes and I am going to build my confidence up steadily by showing up and not putting my foot in my mouth too egregiously and growing with you all. And I just, again, like this would be much less comfortable if it wasn't as great of people like in the comments and in the Discord. So thank you guys so much for being here. And RQ asked a question a few minutes ago. How did you know to not hang it up? And I wasn't sure what I was going to talk about next week, but I actually think I'm going to dig into that because it's a big topic and my kid gets home from school in 15 minutes. So thank you for that great idea.
Becky, DC asked a couple different times, who was
Oh.
it that put you, Jermaine, who put you onto what? I think there was a quick person you mentioned.
Yes. Dr. Joe Dispenza. Let me type it.
Thank you for that. I just didn't want, I saw DC.
Oh, I missed that. Okay. I got to get better at that chat, Dr. It's breaking the habit of being yourself. Breaking the habit. Oh gosh, I'm brain farting. Breaking the habit of being yourself, I think. Neuroplasticity. He has a ton of podcasts out there. But his primary book is excellent. And it really helped me dig in. I did the homework on all of it.
I don't think I've ever listened to this guy. I'm going to check him out.
Oh my God. He changed my life. I'm not even like lying to you right now.
Thanks for the link, Gabber.
Yeah. Oh my gosh. Breaking the Habit of Being Yourself. That is the title of the first book. And he's had a couple other books. But that book I read 3 times all the way through, and I did every exercise in it. And that started my transformation. And that was from my mentor, Jermaine. And it basically just teaches you how to reshape your mind and the neuroplasticity in your subconscious mind that is caused our subconscious programmings and the things that I was falling to so easily, I was not doing them consciously. And so that is definitely what was my catalyst to changing. Oh, my girl Waji showed up, to changing what I needed to do in my subconscious mind that was holding me back. Yes. So I definitely 10 out of 10 recommend that book and the work that he suggests. And you can get a taste of it on any YouTube if you just search Dr. Joe Dispenza. Great question. Sorry I missed that the first couple times. My apologies. All right, you guys. Well, we're back. Riz is going to be back bright and early tomorrow, and tomorrow's FOMC, which I am excited about. And then, yeah, Coach Matt is going to have another killer session on Thursday. Thank you guys for being here at BluSky. I really believe in the work that they're doing with this company and having this Discord with all of this free education to support us, because it's the energy that I love, of that there's enough money in the market for us all to succeed. And so I want to be a part of that in any way that I can, which is why I have a podcast, like this is why I'm here with you guys today. So, let's keep working our system so that we can be those exponential growth traders in time.
Swing Trading 2.0 on Thursday, guys.
Yeah.
If you want to get the second part of the swing trading conversation, we are going to do that on Thursday.
Yeah, I'll be there.
Put that one, Jaja.
And this is going to be recorded from now on, so they'll be posted some point. We'll let you guys know in the Discord where they're getting posted. If anyone missed it and you guys want to catch it, or refer a friend down the line. Thanks, guys. All right, have a great day. Thank you very much. I appreciate you. All right, I'll let you all go.